Hi there traders, and welcome to another one of our regular weekly MacroWatch updates in here for the week commencing the 11th of January 2021. Bullish into 2021 with blue sweep confirmed. So let's first take a look at the macroeconomic and geopolitical developments we've seen in here over the past week. Well, the real key event was the blue sweep. Democrats won both seats in the Georgia Senate runoff elections, giving them now control of the Senate. The Senate split 50-50, with the Vice President-elect having the casting vote. And that means then that the Democrats have the Senate, both houses of Congress, the Senate and the House of Representatives, and obviously President-elect Joe Biden about to take office on the 20th of January with the inauguration set for that date. So the other big dominant event, though, although this did not impact, I'm pleased to see, did not impact too significantly on financial markets, were the shocking events seen in Washington, D.C. as Trump's supporters stormed the Capitol building. So that very, very upsetting activity that we saw there and everything around there. But the actual impact on financial markets was fairly muted in here. But if we take a look in here, though, the political events have obviously had significant impact, with President Trump appearing to incite this activity and this violence, which has seen his social media accounts shut down, and then also calls for another impeachment of the president, or for the president to be removed via the 25th Amendment. These are probably unlikely to happen before the 20th of January inauguration. Nevertheless, political tensions are still very high, and we're likely to see and watch for developments on this front into next week. On the data front, the main focus was the global PMI data early in the week that we saw throughout the week from market and from the Institute for Supply Management. They came in mixed, in most cases slightly missing expectations, in some cases though beating expectations, but the non-farm payroll employment data in here from the US certainly saw a significant miss on Friday, with it coming in at minus 140,000, with expectations around the plus 70,000 area. On the COVID side, European and US COVID-19 cases still surging globally. The number of cases, deaths and hospitalisations at significant levels, particularly in Europe and in the US, where we're seeing surging numbers of cases again in here, into worrying levels seen at or above levels we saw in March, April of last year of 2020. Coming with that, the late 2020 European lockdown measures that we saw implemented throughout December and over the holiday season into early 2021 have yet to slow these number of cases. So that's slightly disappointing, but there is obviously a lag, and we'll be looking at those numbers to hopefully start to slow as we go into January. However, the new variants that we are seeing are causing significant issues with the spread of the coronavirus. And elsewhere, the vaccine rollouts continue globally. Moderna now added to the list alongside Pfizer and the University of Oxford AstraZeneca, and we're going to hope to see those the rollout of those vaccinations continue as we go into early 2021 on a global front. And the hope is obviously then that starts to see us return to some kind of new normal and see the global economy start to get back on track. So let's take a look at the global financial market developments that we saw for last week ending the 8th of January. Well, the equity markets took the blue sweep as a real positive, ignored the violence in the US, ignored the continuing growing number of cases and deaths, hospitalisations regarding the coronavirus, and hit new record highs. We did see some rotation out of the growth stocks in here into the cyclical and value stocks in here, with concerns that the blue sweep might mean that we see some antitrust legislation, potentially the Democrats targeting big tech and new media companies, which is saw the Nasdaq kind of lag behind the Dow Jones and S&P 500. But nevertheless, all of the major US equity averages hitting new record highs in here, along with the DAX in Germany hitting yet another new record high, and the FTSE also enjoying a great start to 2021 with a 6% advance for the first week of the year. Elsewhere, the other significant move was in the bond markets, where the reflation view, the view of a more reflationary pressures coming through from the blue sweep, has seen a yield surge globally, particularly in the US, with the 10-year yield pushing above 1% for the first time since the coronavirus broke in here back through February, March, through Europe and into the US. So a significant move there in yields pushing to higher yield territory. And this move to higher yield territory in here and the widening differential between US yields and yields elsewhere globally saw the US dollar stage a recovery effort, having been very weak through the late part of 2020. So dollar yen significantly higher in here, a strong rebound in dollar yen. We saw the dollar rebound against the euro at the latter part of last week. So EUR USD lower, and but we did see the Australian dollar, New Zealand dollar, Canadian dollar, those risk currencies hang on to gain. So the whole global risk on theme is keeping those risk currencies bid. But we did then see also the pound stalling, continue its stall, not managing to make new highs since the Brexit deal was done, and actually dipping back lower since the deal was done and put into fact at the very end of last year. In here, the markets actually dipped back lower into 2021. In the commodity space, we've seen a surge in the oil price again because of the whole expectation, more reflationary pressures coming through, with a better recovery anticipated particularly in the US and potentially global economy with the blue sweep. And we also saw copper pushing to a new multi-year high. Gold, though, suffering significantly, a big sell-off in the gold price in here, and that was as we saw that move to US higher yields, the higher yields globally as well, and then also the US dollar strengthening, leaving the gold price under downside pressures with a significant sell-off. So let's take a look in here now for the week ahead, week commencing the 11th of January 2021. Well, what are we seeing here? Well, political events and the threat of potentially more conflict we monitored in the US into the inauguration, which is on the 20th of January. So that's going to be key to monitoring here coming into the next week. And also watching for any new announcements we might get on the vaccine side and the delivery of those vaccines that we're seeing throughout Europe, UK, US and globally. COVID-19 cases, hospitalisations and deaths stay in the spotlight as ever, alongside any new potential lockdown announcements we might be seeing. Maybe something coming out from Biden before the inauguration, maybe some hint at what he's looking to do on that front in the US. On the central bank side, it's fairly quiet in here. We only have really Fed's Powell speaking on Thursday of anything of real note on that side. So let's take a look at the macroeconomic events we've got coming up on the data side this week. Australian retail sales on Chinese CPI Monday. Nothing really of note on Tuesday. US CPI and the Fed's Beige Book on Wednesday. We get China trade data, German GDP, US weekly jobless claims and that speech by Powell on Thursday, and then UK GDP alongside industrial and manufacturing production, and then we end the week with US retail sales. I'm going to wish you all a great trading week. Please stay safe out there, and we'll be back with you soon with another Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.